Hello, you are watching Morning Markets on BNN Bloomberg. About an hour ago, the Bank of Canada increased interest rates yet again, taking the trend-setting rate to 5%. In part, as they justified the decision, they acknowledged that growth has come in hotter than anticipated, but they also think it's going to take longer than they previously thought to get inflation back down to their target. They're now saying it's going to happen sometime in the middle of 2025. Let's bring in Warren Lovely, Chief Rate Strategist and Managing Director at National Bank Financial. Warren, thanks so much for being with us. There's, dovish hikes, hawkish no moves in interest rates. We got an interest rate move higher, as well as an inflation target that gets pushed out even further. That sounds like a hawkish hike to me.
Yeah, well, I think, Amber, you hit on a couple things there. What the Bank of Canada is telling us, I think, pretty clearly here is that growth, if not strong, certainly stronger than they had expected, and inflation kind of more persistently stubborn. And I think they're worried, nervous, anxious that the great victory they need to secure, getting inflation to 2%, could take longer, could be more complicated. And as a result, they're keeping their options open as far as going further.
Now, we're not an island. This is taking place on a day where U.S. inflation now sports a 3 handle, the lowest place of headline inflation growth that we have seen since March 2021. Risk assets took off, rates, bond yields are coming down. How do we think about that divergence there? Because we're still pricing another rate hike by the Fed July 26th.
Right. So a couple of weeks out, I think it's still likely that we'll see the Fed deliver another hike. But, you pick up an important story here, and that is that inflation, at least all items or headline inflation, has come down pretty rapidly. The Bank of Canada acknowledges this as well. What they tell you, though, in the statement is that it's mostly an energy story, and core inflation, underlying inflation, hasn't quite cooperated the way they'd like. It's proving a little bit stubborn. The momentum in inflation that they really want to see hasn't been there. And that's, I think, a bit concerning from their perspective.
The Bank of Canada has to explain, I guess, to Canadians their job every day. And people will look at the data and say, well, inflation is coming down. Why are you still increasing interest rates? Do they need to communicate better that they're looking at this as more of a risk manager than, the risks to inflation are skewed to the upside?
Yeah, well, I think the communications piece here has been a difficult one for the bank for some time. I mean, look, we've traveled a lot of ground here. We've covered a lot of ground since they started going last March. We've got now 10 hikes, a 5% target rate, and yet inflation is still higher than they would like it to be. So there's this somewhat difficult composition here where you've taken a lot of action, you've done a lot of work, and yet you still don't have that inflation victory in hand. It leaves them, as a result, on the defensive still, I think.
I guess because a lot of the causes of inflation are actually outside of their control. Isn't that the inconvenient truth here? That
is. I mean, we can only control so much here. The Bank of Canada can only control so much. So I think it is important to see progress in U.S. inflation. It is important to see progress elsewhere. But we still haven't seen enough yet, presumably.
All right.